thank you so much for joining this webinar. I'm really excited to be part of this webinar because this entire speakers is from Hubble Technologies family. The product name is CloudBankin that we are doing it. So we have Alex, who's the CTO of our company, and Rajeshware, who's a subject matter expert from our company, Hubble Technologies. Yeah. So today's topic is one of the hottest topic in the current industry, right? So in the last 2 months, we are hearing a lot about this particular regulations, right? So we have two close friends for all these NBFCs and fintechs. Obviously, one is the RBI and the second is the Google Play Store, right? I mean, the last 2 months, there are a lot of news with respect to the funding to fintechs is getting drastically reduced, and a lot of apps have been delisted, and their revenue has been come down to 50% fintech's revenue. So there are a lot of buzz is happening around this market. So why particularly we are conducting this topic, right? So the main reason is we have been delivering solutions to NBFCs and fintech companies. We provide lending infrastructure as a service. So any company wants to start their lending operation, they can use our product. So while we are talking to our customers, right, in the last 2 months, we are getting a lot of calls from our customers stating that my app has been delisted. What kind of regulations I need to follow in my website, app store, right? So we're getting a lot of calls from our customers, but we are actually solving that. So why can't we solve this to the entire Indian ecosystem, right? That's why we're conducting this webinar. So on a high level, we are categorized our webinar into 4 areas. One is on the market landscape side, number one. Market landscape, where Rajeshware will be talking on how this market has been booming from the global standpoint as well as from an Indian standpoint. The second is on the specific regulations that is being involved for the digital lending. And the third, which is going to be covered by Alex, where he'll be talking on how regulations is coming from the pseudo regulators, like being Play Store, be it Facebook and other channels also. And finally, we are having a Q&A. So I'm just restricting the introductions very hardly 2-3 minutes. It's because we don't have time for the entire 1 hour to address all these regulations. So we are trying to have short intros to make it quickly getting into this topic. So Rajeshware, over to you. You can quickly share your screen and then you can start presenting. Just one more point. So whenever you have any queries, please feel free to put in the chat box. We have a separate option as Q&A in the last point. Maybe if there is any interesting question comes, I can just take it up as and when. Yeah, Rajeshware, over to you.
Good evening to all. So we'll straight deep dive into what we have in plan for today. So basically, we're looking at the digital lending circular that is issued by RBI. We're talking about the 10th August circular. So you will see, I mean, this is how we are going to take this through. So before we go fully into why these are on the guidelines, we will first have a look as to what is the global landscape, what is India, and how does these features now, how is RBI looking at these, and what is their response to what is happening in the global ecosystem. So if you look at the global market, we're looking at the digital lending market at $5.8 billion, and it is looking to grow at about 25%, about 26% by 2030. And just to give you an Indian perspective of the whole thing, so 2021, 2022, we did a total of $2.2 billion worth digital loans alone in India. So this is just the, the digital, how is the digital market moving? That's the idea. So we have little more input on those. So when you look at this, we have value disbursed and numbers disbursed, where we will see scheduled commercial banks as well as through NBFC channels. As the graph suggests, you will see that the digital lending through banks is still a little bit more nascent, whereas it's more aggressive when it comes to the NBFC landscape. And now we will look at what are the factors which are actually contributing to this digital shift. Okay, so we see about 1.68 million new EPFO accounts which have got opened only in the month of May 2022. Compared to last year, this is about 83% growth. This number becomes very important just to understand that there are so many more people entering into the structured pay schedule, thereby making them eligible to take more loans, So that is the augmentation to the market just in a month, okay? And in that, you will see that the age group of 22 to 25 years contribute the highest. I mean, that's the age group where the maximum number of accounts have got opened. Next input that we have is on the penetration of smartphone. So we have 54% as of 2020, where they are predicting that as of 2026, it's going to touch 90%. And then finally, we are looking only at UPI transactions as a number of transactions. We have 657 crores transactions only for the month of August. In terms of numbers, the number is unimaginable. So these are the things that are happening as far as the industry is concerned. Now, this is a small peck. So when the moment we say digital lending, there is a certain amount of transactions that is happening in the traditional lending segment. And we also have a certain, the new baby, which is into this area, which is BNPL. So here are some numbers which will give you how the figures have grown just in a year. And the prediction is it is going to be 14% of the economic e-commerce transactions by the year 2027. This is what the numbers are going to be. So you see that in the digital lending, this is going to be another big segment where the growth is being predicted. And now we will see how the global markets where BNPL is developed has moved. Okay, so earlier this market was not regulated even in the developed economies. Now it is regulated. And this is a global data which is from TransUnion Sybil, where we have delinquency, 60-day delinquency. On a non-BNPL case, we have about 10% delinquency. In a BNPL case, it's roughly double. We are at about 19% delinquency. One other interesting stat that has come out in this whole thing, they say that at least 1 out of 15 BNPL loans have missed at least one repayment. This is the other factor that has again come up. And when you look at India and specifically on the BNPL area, this is a survey done, and it's a area wise which has been done. So wherein 30% of the responses that we received say that the monthly spending has increased. Then 90% said they are spending more than what they've intended. And the trend is that it is the same thing across tier 2 and tier 3 cities also. So we can understand how the penetration of digital lending is going deep into the area. So we know that the fintechs who are enabling the financial inclusion are evidently a part of the system, and they will contribute a big section as far as the growth is concerned. So which then brings us to why this regulation. So naturally, when there is going to be so much growth predicted, so there naturally, as RBI being our regulator and custodian of customer protection, all that. So we have regulations that have been issued. So we are broadly classified into 3 areas: customer protection, legal and regulatory, and technology. We will go into each of these deeply in the further slides to come up. So some major areas where there is changes that they're talking about. First important areas, like they've said, when we are disbursing loans or collecting, the money has to go directly from the lender's account into the borrower's account. You can't move it through a third party account or a pseudo account, whatever it is. So this area brings in, I mean, where we see more of innovation that is going to come up in this area, because here the payment gateway structure, etc., all that is getting affected. So a lot of new innovations to come in this area specifically. One other important factor when they're along with this that they've said is that you can't increase limits without consent. Like, let's say there is a limit sanction to a customer, the consent has to be taken before the limit is increased. This is one other area that they've mentioned in the guideline. As far as when it comes to the key fact statement, there is a clear structure that is announced in the slides to come in. We'll show you samples of key fact statement, and APR is APR should be a part of this key fact statement. We can go ahead and show you how APR is calculated. So we just have a small sample calculation that is available. So let's say there is a loan amount of 2 lakhs on 12 months with a 12% rate of interest. The EMI comes to about 17,000. The interest is about 13%, and there is a small processing fee. So now we will see the effect of, let's say, adding a down payment that we have requested about 20,000. The APR changes to about 33%. So this is what RBI wants us to show as far as the key fact statement is concerned. So then comes the data privacy in terms of how we have to, what data can be stored, what cannot be stored, what needs to be disclosed, when do permissions need to be taken. In terms of process transparency, what are all the bodies which will be involved as far as the lending cycle is concerned, who is provider of the app, who is going to be the recovery agent, what are the roles of various people at what period of time. All this input also has to be shared with the customer and updated in the website time to time. This will also be discussed in further slides. As far as the grievance redressal is concerned, the contact person to whom all complaints has to be addressed, email ID, phone number, timelines within which it was going to be addressed. All this information is supposed to be available. And finally, when it comes to the reporting, now all loans, whatever be the tenor, reporting has to be done to the credit bureau. So this is how, these are major areas in which the guideline speaks about. So when we go through the circular, these are all various terminologies that we are reading. So we have balance sheet lenders, basically the main lender on whose balance sheet the loan is going to be. In case of NBFCs, banks. Okay. So the loan service providers, they basically all these apps, Uni, Slice, all these people will come under this segment. Marketplace lenders, basically Paisa Bazaar, those kind of areas. And of course, very few P2P lending. Regulator is the RBI. We have pseudo regulators, that is RBI regulating through, who expect these pseudo regulators also to follow the guidelines, so that so much of regulations can be implemented. So you have Play Store, Google Play Store, Facebook, and all being pseudo regulators. You have digital lending apps and the regulated entities. So this portion from now onwards, we'll have Alex, who will now talk about how these app related status. We'll start with app related statistics and then take you through what needs to be done at each point in the app and how you have to do the changes. Over to you, Alex.
Once again, Rajeshwari, just a quick question. We have a few questions which has been posted by the audience. Maybe you can see and then you can respond to that. So they are asked, one of the question is, what is the difference between LSP and the DLA?
The digital and the DLA is provided by a loan service provider. I mean, basically, if they have their own apps, they will use it. Okay. So if you're using the services of a third party, so they become the loan service providers. Ideally, the fintech, that is the renaming that they have done. The RBI has given new naming for the fintechs, which is going to be the loan service providers.
Okay. So another question is, can an LSP or DLA, right, carry out a KYC?
It says that when you say 1 out of 10 BNPL loans have missed a payment, does it mean that you have defaulted or only delayed? See, they have missed one payment. There is no, I mean, the idea is, let's say there is a due date, they have just missed. Like, let's say he doesn't pay on due date, we calculate it as missed payment. So it could have been paid, it could have got into a defaulted state also. We are looking at missing of a payment due date. So guidelines of 20th August, that circular is what we will be covering today. Okay. Can a P or PG service use fund movement? If not, then there will be no use of an escrow setup. See, the most important part over here is that the PA or the PG has to set up the account which will pertain to the lender. Okay. And it should move from the lender account directly into the account of the borrower, which means, like, let's say a payment gateway is now service provider has integrated between 3 or 4 banks. Okay, they will not be able to shift the money from one escrow to another and then complete the transaction. That option will no more be available. They have to go through only with that one integrated account. So basically, it is more on the what should I say, the UX. I mean, the user experience is what will get very it'll change. So that is where we are. I mean, now they'll have to come out with different solutions where the lending will happen directly from. The disbursement will happen directly from the lender's account. You still want me to take more questions?
Yeah, ma'am. Rajeshware, I think we are flooded with a lot of questions. So we can have the questions in the later point of time, and maybe over to you, Alex. You can proceed with the app related stuffs.
Okay, sure. Thank you.
Meanwhile, audience, please raise your questions. So what are the questions that are relevant to this particular webinar? We'll be answering to all these for sure. Okay, yeah, Alex.
Hi everyone. So from the tech perspective, I think we would cover a wide range of things with respect to the new regulations and whatever experience we have gone through so far by publishing apps into the Play Store, because we have faced multiple problems when we publish app to the Play Store. There are a lot of new changes done, apps getting removed. So we had issues with on these different lines. So we have compiled a list of things based on our experience and with the new regulations to go with a list of things so that we can avoid such things in the future. So that is the intention of this. So this is one of the metrics which was shared in the report. So there is a report created by the RBI, which is based on a working group. So in 2021, so they have created a wide, they have covered a wide range of topics with respect to digital lending on different areas with respect to fraud, fake apps, data theft. So, and they have proposed a lot of recommendations on those lines. So on which one of the points was they have measured the number of illegal apps in the market. It's supposed to be more than 50%. So in this case, if you see there are 600 apps, this is from the 2021 data point. As of now, we get the recent news saying that there are 2,000 illegal apps in the Play Store. So which means there are a lot of problems for consumer. So the report primarily focuses more on the consumer protection, especially on the consumer protection, the regulatory framework. So most of the points are covered on the consumer protection end. So on the second part of things, the RBI also, the finance minister also proposed RBI to whitelist all the legal apps and remove the other apps from the Play Store by the help of MeitY, the Ministry of Electronics and Information Technology Ministry. So, they've already started sending information to the NBFCs, other regulated entities, to make sure this whitelisting happens. It's already started. So we recently received mails from the customers on these lines. So yeah, go to the next one. So this is one example which is from the report. So different reasons which were actions were taken with respect to the policy violations, invalid URLs, wrong information. So there are multiple things listed, and then these were removed from the Play Store. So with respect to the regulations and the tech point of view, we'll cover these two areas more prominently than the last one, which is the regulatory framework. The regulatory framework, I think, is more about sending data to the CIC. So we will not cover that. We'll focus more on the consumer protection and the technology part. So with respect to consumer protection, I think ma'am already covered. We have to include the annual percentage rate, penal charges, which has to be annualized now, which was previously not there in the key fact statement. So now these some of the things that has to be there in the key fact statement explicitly, so that the consumer gets to know of all this information upfront. So those are some of the aspects. We covered some of these aspects previously, but they have added new things like cooling off period, to time to exit the loan with the number of days for him to exit without any penalty. So these information also should be in the key statement. So we will see an example for that. So this is one of the violations which we typically see in the Play Store when we don't follow the minimum and maximum period for repayments. This is from the Play Store example. So if you don't specify minimum and maximum period, or the APR percentage, or the total cost of the loan, especially the example, so they will immediately reject the app. So when you publish an app, it will get rejected immediately. So the right way to do it would be to give the next slide. So where you basically define what is the loan amount, minimum and maximum loan amount, the tenor, minimum tenor and the maximum tenor, and the APR and the interest rates, and processing fee, and any other things which you are which you have to declare here. And you should define an example for this calculation, like ma'am was explaining previously. So you have to give an example on how this would look like in your app description. So this is one of the ways to avoid the immediate rejections. So where if you follow this, you will not have this problem of app rejection at the first front. We'll move to the next one. So other areas which the consumer protection covered were on the authorized recovery mechanism or the agent. So what kind of recovery mechanism you're going to do, and who will be the agent for that, so that explicit details of the recovery person has to be in the document, in the policy documents. It has to be explicitly defined. And for the grievance redressal officer, again, they have specifically mentioned that the officer details has to be on the regulated entity website, or the loan service provider website. So it has to be explicitly there, so that they should be able to apply for the grievance. At the end of the day, the regulated entity is the sole responsibility for any grievance, any issues. RE has to take the responsibility. Otherwise, the customer, if there is no resolution provided within 30 days, we have to provide a link for the customer to file a complaint about the regulated entity, which is the NBFC or the bank here. So if they can file within after 30 days, they can file a complaint against the regulated entity. So that is something which is mandatory, which should be there in the as per the new regulation. So we'll see an example of the key fact statement in the next slide. It is already in the next slide. Maybe you can just go to the next slide. Yeah. So I'm just skipping the schedule part. So this is the annexure where the regulated the key fact statement is provided for the borrower. So previously there were some of the things which are not there, which we didn't also have in our previous published apps. So now we have started incorporating that. For example, the cooling off period, or the recovery agent, who will be the details of the recovery agent at the bottom, the name and the designation of the grievance officer, all these has to be declared explicitly in the key fact statement, along with the other important things like the APR and the penal charges, which might come, which should be annualized as well. So these are the some of the other information which has to be in this particular format, so that this is mandatory now as per the regulation. And followed by this, there will be a repayment schedule, which there is not much of deviation there, but this is more on the this is the part where it's changed. So we can go to the next one. So with respect to consumer protection continuing, there are other things which the regulations have changed, which is with respect to the digitally signed documents. So when the customer applies for a loan and then gets the loan approved and then the loan gets disbursed, we have to get a digitally signed document before disbursing the loan. So all these documents has to be on the letterhead of the regulated entity. And when we sign the document, it should include all the key fact statement, which we saw in the previous screen, summary of the loan product, sanction letter, terms and conditions, privacy policy. All these details has to be in the e-signed letter. And following that, it also has to be sent to the customers on the approval of the loan. So previously we used to have some limitations. If it's less than a particular amount, we don't do e-signing. But now I think it's a straight away change in the regulation, where we have to do the e-sign for any loans when we do digital lending. So that's a very, very important change which we feel. And with respect to the other parts of the website, there are clear specifications provided for the regulated entity and the loan service provider's website. So they have to specifically define the loan product information and who is the lender, what is the customer care number, and the link to the Sachet portal, which is for basically complaints about the regulated entity. And the privacy policy, which is very, very important. Out of all privacy policies, very, very important, especially with respect to the regulated entity or the LSP and Play Store. So privacy policy is the place where it fails most of the times. When we don't define the right information, privacy policy is something which really scrutinized very, very to a highest level. So we have to be very, very careful with the privacy policy, define everything in the right order, with the right sort of information. And the last information which is expected is the list of DLAs, which is digital lending apps, which is published by the regulated entity, or it could be linked with multiple service providers. A regulated entity can partner with multiple loan service providers. So you have to list the list of loan service providers in your website. And if the loan service provider is having their own apps or website, that also has to be listed. So these are some of the things which is as per the new guidelines, you have to list them in your website. And if you have from the app also, you should define this information. And both of them should have the regulated the loan service provider and the regulated entity should have links to the partners and vice versa. They should both have their links so that the consumer knows that, okay, this is what is happening. When I apply for a loan, the actual loan provider is some other entity. So we should get this knowledge. And when you go to the regulated entity's website, you understand that they are partnering with this loan service provider so that there is no fraud happening there. So yeah, that's the intent. So this is one example which we see recently. So one is on the left hand side is the loan service provider, which they have defined all the lending partners. So primarily apps also get rejected when you don't specify the name of the NBFC. So you have to define the lending partner who you're partnering with, who is providing the loan. If you see here, they are also given the link for the NBFC so that you can click there and then go and visit them. Similarly, on the right hand side, Navi itself is an NBFC. Still, they mentioned who is doing the NBFC in the cash and home loans provided in the marker. If you see, they have mentioned it's a non-deposit taking systematically important NBFC registered and regulated by the RBI. So they've clearly mentioned what they do, who is taking care of who is the regulated entity here. So this has to be clearly defined. Otherwise, the app will get rejected immediately. Okay. So on the other parts where we talk about the data related things or the app specific permissions, we have multiple changes done recently. Previously, we used to access contacts, call logs, files, other information. Now there's a strict order to avoid all these accessing all these phone resources. Like even they mentioned file media. So sometimes you might have to upload documents from your phone. So those are some areas where it can be still more clear. But it's like blind accessing the file media is avoided, and the contact lists straight away should not use contact lists or call logs, and they mentioned telephony functions as well. So in the report, it mentions that the main reason for doing this was to avoid the wrong usage of the contact details. They've taken they've mentioned that the contact list has been used wrongly to harass borrowers by sending information about their loans to other people. So they clearly mentioned that the such wrong usage should be avoided. So that's why they wanted to come up with a strict guidance on this. So they have strongly advised to not to do this. So even though there are some gray areas, like for example, reading SMS is still a gray area because even though telephony functions will, on the overall, it will cover SMS, but still some of the vendors, when we speak to some of the vendors, they say SMS is fine. Still fine reading SMS is fine because when you're doing underwriting, there is all options to get alternate data so that you can underwrite the person when there's a case when there is no credit data available with the credit bureau. So this might be one option where we can get alternate data from the SMS. So we have also integrated with some SMS analytics providers. So this still might need some clarification. Similarly to the file also, it cannot be blindly, you cannot avoid, because sometimes you might have to get some documents from the phone. Otherwise, you have to rely only on the camera and other things. So what is allowed is only the camera, microphone, location. Those facilities are avoided are allowed with some explicit consent, and it has to be taken every time. That is the intent which they've given the regulation. So it cannot be like ask one time and then you can use any times. So you get in the location permission and then you can always track their location. You cannot do that. So only when it is required, you can take the permission and then get this information, and then you have to ask for it again, or you cannot reuse that. So that is the intent of this particular regulation. And consent, again, when the user has given consent, there should be ability to remove these consent or remove these permissions within the app, is something which is also expected from the app perspective. Move to the next. Yeah, this is one example which we give from our app. So when we try to get a consent to capture the video, and we also say that this information is sent to a third-party service provider, so that we analyze your video footage to see whether it is a valid live video or not. So we give us explicit consent saying that if the consent is not accepted, we will not let them proceed with the flow. So this is an example for that.
Once again, Alex, just give a pass over here. Can you address few questions that has been coming? There's some basic questions are there. Can you open the Q&A and then check it, and can you scroll it from the bottom to up?
Okay. So location of the customer. So I don't understand the question here. So when we apply for the loan, we can get a consent to get the location of the customer at that point of time, so that you can get the location of the customer. And once you get the permission, you use that once, and then you can store this information. But after that, you will not be able to reuse this to continuously track. So that's what been my one-time access. Get permission once, whenever it is required. So that is the intent there. What do you mean by lender details on regulated? So the question is, what do you mean by lender details on regulated entity website? So it's basically when we are describing the product and who is giving the loan, we define the products, and if sometimes the website can be different from the actual company, so you have to define the details the right way, so that all the information are captured properly. So you explicitly say this is the lender. Like in the Navi example, if you saw, Navi specifically mentioned we are at this particular NBFC, so who is providing the loan for this? So that's what I meant by lender details. So who is giving the balance, who is the balance sheet lender, you have to provide this details. So most of the cases regulated to be NBFCs or banks. So sometimes it would look like it's not required. So if it's changing, because now what happens is Play Stores recently started validating if the name of the company and the website URL are the same. They're asking a lot of questions around these areas, why it is different. So we got some recent clarifications on the same. So it's better to be explicit, and then you can follow the regulations. Yeah. As a LSP, we source prospects for our partners, but we are not a final loan provider. So we're supposed to host Annexure 2 on our website. So basically, the Annexure 2 is provided by the regulated entity, because it's on their letterhead. So you are just enabling the borrower to get a loan from the regulated entity. So I didn't understand. You don't have to host Annexure 2. It's part of the flow where you will show the key fact statement for the customer during the loan flow. When the customer applies for a loan, you will show the loan summary details, where you define all the details like the APR, product details, monthly loan, repayment tenor, all the information, along with analyzed penalty charges, nodal address officer, recovery mechanisms. Those sort of details also has to be mentioned. That is what is covered by the Annexure 2, along with your repayment schedule. So this will be generated and also sent to the customer's email and email account. If I'm not covering, if I'm not answering properly, maybe you can ask the question again. Okay. Are we taking care of the loan description part in SaaS display to customer? I didn't understand the question. Can you brief a little bit on that? Okay.
One of the questions, Alex, is what is SaaS portal? Maybe if you can give a brief on that.
So such as portal is something which you can file a complaint against any regulated entity like SEBI, NBFCs, insurance, anything. So it's a portal where you can complain against a regulated entity. So the number of complaints received also were from which I showed was from the such a portal. So you have to give this link in the application or the website, so that the customer knows that there is a way to complain when their complaints are not resolved by the regulated entity or the LSP. So that is the intent.
Okay, I think, Alex, we can proceed now. Maybe we can take those questions at the latest point of time. Okay.
Okay, fine. So, yeah. So this is another gray area which we feel we need more. We need more information on this. It says loan service providers or the digital lending apps should store only minimal data. For example, it says name, address, contact details of the customer. Rest should be with the regulated entity, which is the balance sheet lenders. So this is something which we need to understand more because this means this is only the origination data can be stored within the very minimal data stored within the LSP providers, not the loan information, and those sort of things are not mentioned here. So just something to watch out for. And with respect to the other policies like data retention, it clearly says what kind of data being stored has to be mentioned in the privacy policy. So this is where the privacy policy becomes very important. So you have to mention what kind of data you are storing, and what are the length of the storage, and what are the protocols for removing the data. Let's say the loan is completed, there should be a mechanism for them to remove the data from the system. So what is the protocol for that? And what are the ways of handling security? If there is a security breach, how do you handle it? So we have to define these protocols in the policy statements. And it also says you cannot store biometric data. Even if you access, you cannot store the biometric data anywhere. And some other things like cloud service should be in India. These are standard things. Yeah, so the privacy policy is very, very important with respect to the app or the RBI guidelines as concerned, because most of the things are related to that. Whether it is the data, how your data is being shared, is it sensitive data or personal sensitive data, or some other data which is relevant for your creditworthiness. So we have to clearly mention what the different data types which we use in the system, how do we capture it, how do we store it, and so those are the important things. And it also talks about who's your target audience. Some of the things are related to the apps, especially how is specific, some parts of the app, restricted parts of the app are used by the can be accessed by the borrower. That will explain how the target audience will be using the app. So that's what it means by accessing restricted parts of the app. And how do you use the sensitive permissions which is received from the app perspective? So if you get an access of a camera or an audio, how are you going to use it? So that is also very, very important. And apart from this, who are the third parties you're working with, or service providers, who is helping you to do KYC and other information, which is being shared with your third party provider, and how do they process it? How do they store it? Whether they store it or they don't store it. So those information also should be available. So from a regulation point of view, this information clearly defined, then it is much, much better from a privacy policy perspective. So along with this, we also cover the grievance details like we discussed. So we cover those details as well. Yeah, so some examples which we see from our publishing, our mistakes. So in this example, if you see, we have provided a privacy policy URL, and it says that you're accessing a sensitive permission or user data, but it contains an invalid privacy policy link. So we have to correct it. We have to correct it, add the right information in the privacy policy link. Sometimes if the privacy policy link is down for some reason, you will reject for the reason as well. So you have to make sure the privacy policy link is always accessible from your app and from your website. So this is one reason. Go to the next one. So we talked about some questions were as around Play Store being a pseudo regulator, right? So this is one example. Play Store has its own set of regulations for personal loans. So they have a specific page for that. So that is a place where they say that, okay, you have to define you have to define the name of the NBFC or the link for the NBFC, or they say this is the min and max. And there are specific regulations defined by the Play Store itself. We'll see. I'll show you an example, which was a very, very surprise for us as well. And recently, because of the RBI guidelines, so they have also asking to link the NBFC or the regulated entity who is responsible for this particular digital lending app. So this is one example which I've shown. This is asked from the App Store perspective. So I'll show you another example. Can you go to the next? So this is something which is also used on the regulation point of view, just purely with respect to Play Store. So whatever we have defined in the privacy policy statement of the loan for privacy policy statement, which is defined in the app link, the same information will be conveyed in a different way in the Play Store. Play Store also has its own set of regulations. So you have to define each and every information, how it will be used, how it will be processed, whether it is shared with someone else. So all this information has to be declared so that Play Store is very, very clear on what you're doing with this information, and it is exposing this information to the borrower, saying that, okay, this is what they're doing with your information in a clear way, apart from writing in a privacy policy document. That is the intent. Most of the things will look similar. So if you cover the privacy policy in the right way, this will be straightforward, and you can just select the right items, and then you can say, this is what we are doing, and we can get away with that. So yeah, you can go to the next one. So yeah, this is something which is showing how we are using the data and how we are sharing the data with other companies. In this example, we see data shared with other companies and organizations. So how we are sharing, what kind of information are we sharing with other companies? So it's also something which you have to define in the Play Store. You go to the next one. So this is the interesting part. So recently we found a Play Store violation where you cannot publish a digital lending app with less than full loan repayment period. So it seems that it's a regulation from the Play Store itself. So it is not a regulation from the RBI, and RBI itself accepts that fact that Play Store has some kind of regulations on its own to avoid certain misuse of apps, lending apps. So, and they agree that this will not help with the payday loans or other different daily wage loans. So in those cases, loan alone will not be able to be published, cannot be published, because the full repayment will be less than 60 days. So this is something which is very, very interesting. So this was previously 90 days. Now they've reduced it to 60 days recently. So when you publish an app, so interesting, what happened was when we published an app with in the description, it said 30 to 60 days. And they went inside the app when we published the app, tried to publish the app, they went inside the app and then found that the tenor was 30 days, and then they rejected the app. So saying that it should be more than 60 days. So which means we have to work around these scenarios because they will not let you to publish less than 60 days. This is very, very specific to Play Store, not with respect to RBI. So you have to be aware of few edge cases like this. And yeah, this is one other case where we had some issue with the Play Store where SMS information was being used without disclosing it properly in the privacy policy. This is a very, very clear, good example. So which means they look at the privacy policy link and then they see whether you have declared that properly. So which is very, very important. So given the privacy policy, you have to make sure whatever permissions we are receiving from the app, you have to define that in the privacy policy and then say how we are using it. So that is one reason. And there are some cases where app stores can give vague informations. We have faced some scenarios. Maybe you can go to the next one. So, for example, this case, there is a prominent disclosure section in Play Store which is a little more complicated. So you have to be very, very explicit about what you are using it for, explicit consent, like the video screen which we saw. So in this case, what happened was Play Store was saying that there is something which you're sending from your domain to another domain, so that you do not have a prominent disclosure. So you might face issues like this, even though you have given everything properly, everything done. So finally, we found that there was some wrong old build, which was available in the system, and we fixed that, and then that resolved the issue. So why I'm trying to say this is because sometimes you will get some vague information. If you need more information, you can do a appeal process. So if you know that if you have done all the things right, and then if you're still stuck with the issue, you can do an appeal process to see if you can get more additional information. Generally, it takes 1 to 2 days to get a response for the appeal. So you can apply for an appeal to get those kind of information sorted out. You can go to the next one. Yeah, so this is the appeal process. So yeah, so you can do this to get the issue sorted out. Otherwise, most of the things are very, very clear in the App Store. What regulations to follow, what are the guidelines you do. If you've set up the best practices, like can you go to the next slide? So the best practices will be mostly around clear privacy policy, a valid URL with the right details, right set of information, updating the App Store details with the right information, and the data policy. There is a data policy document which we have, and clear app permissions only for required things, not for every permission which you might not use. So clear app permissions, and now based on the recent regulations, you have to have once permissions for location and video. Or any other things which you might use. So you have to make sure this is also taken in care into account and don't use it in a wrong way. And finally, I would suggest to have a checklist of things for every time you publish an app. You have a checklist of things for the privacy policy and the App Store guidelines and the data policy. So we have a checklist with ourselves, so we can share if anyone is interested. We have a flow from creation of app, how to publish data policy, how to set up the privacy policy. We have a detailed set of document for our customers to go through it to publish an app. So if you need, you can drop us a mail on that, so we can share you with that. So apart from this, one other suggestion I would say is to go through the RBI documentation or RBI working group report from 2021. It talks about future guidelines also, where these guidelines are some of the things which are trying to bring in now. So go through the report. It's a detailed report of 150 pages. It talks about multiple countries' regulations. They compare different things, and then finally they're coming up with the recommendations. So those recommendations are something which is coming as regulations in the later part of the year. So I saw some of the examples from the old report, which is coming up now. So go through that to understand what you might expect in the future, so that it will give you some rough idea of what might happen. So, yeah, I'm done from my side.
Perfect, Alex. Thank you so much for explaining screenshot level things that we are encountering on a daily basis, right? So by the way, CloudBankin, we provide white labeled apps to NBFCs and fintech companies. So we are facing all these challenges on a day-to-day basis. Like whenever the app is being uploaded in the Play Store, suddenly a customer will calling us and saying that the app has been delisted for some reasons, right? So again, we will understand what is the problem, and then we'll sort it out the issues, and then we'll help them making the app live again, right? So yeah, so finally we have 7 more minutes. Maybe we can take up, I think we have got a 30 plus list of questions. Rajeshware or Alex, you can take it up. I'll just take only the selective questions. Maybe you can answer those things. Sure, Neelam, we'll be sharing you the checklist for the app or a website. Definitely that we will be sharing out. And this video is also like, there are a lot of questions being asked whether this video will be shared or the PPT will be shared. Yes, we'll be sharing that for sure. So Alex, this is the question to you. So do I need to get the consent from the customers again and again, or just one time is fine for us? What is your take?
So yeah, I think, and the way I interpret the regulation is, so whenever we do a loan process, we have to get the consent again, because if you are using this permission to do something, for example, whether you are accessing the camera or a location or an audio, you have to get the consent at that point of time, and then you have to mention that you are using this information let's say you are using this information to send it to a third-party provider. Then you have to mention that, okay, you're getting explicit consent from them. So to do that, so let's say they apply for a loan for the first time, and then if they come back and then they redo this, you would have to do this again. This is the way I interpret it. So there might be some the interpretation can be slightly different for different things. So again, I mean, you can go through the regulation again. So it clearly says it has to be only once for the loan or the transaction. So by that way, it would be only once, and then you will have to do it based on the loan transaction.
Okay, moving on. The next question is Rajeshware there. The next question is how to prepare APR for a short-term loan whose maximum tenure is 30 days.
Give me a few minutes. I'll just adjust that and then show the working for you.
Yeah, you are going to showcase that workings now?
Yeah, I can share it. Whoever is that person, we did it basically because monthly is a very easier proposition. Wherever I have used 12, we'll have to use 365. That will give you the APR for a 30-day loan.
Okay. So Abjit question is these guidelines specifically to the website or to the app also?
So it's both to the website and the apps.
Okay.
Any digital lending, it's applicable to both. So you have to, I mean, it applies to both. So only part is Play Store will not come there. Otherwise, the rest all things remains similar.
Yeah, and I mean, there are a couple of questions on the what data to be stored, right? I am a DLA, I'm not a regulated entity, but just what kind of data that we should store, and what kind of data that I need to push to the lenders. Any specific examples that help us? That's one of the questions, Alex.
So this is where we are not also clear. So it says it has to be very basic information of the customer, which means you cannot store identity documents or anything on those sorts. So which has to be with the regulated entity. So I think we might need some more clarity here. So we will try to find these answers probably and might share with you guys. Yeah, we are not sure at this point of time. Maybe ma'am or Mani can add.
I think that is definitely a gray area for sure. Maybe we can soon be able to get those recommendations from RBI also specific to what kind of data storage to be done. I'll move on to the next question. So question to you, Rajeshwari, like how the repayment will be done. So the repayment should be directly from the customer's account to the account of regulated entity, which is the lender. Or what if you are using any third-party vendors for collecting EMIs? What kind of regulations been implemented?
That is completely stopped now, right? So the repayment has to directly go into the account of the lender. And they're very clear. They've also mentioned that, let's say, the loan service provider commission, etc., has to be directly settled between the lender and the loan service provider. So there can be no collection at fees collected for a particular value, let's say 100 rupees or whatever is the value. It cannot be taken by the loan service provider and then money is passed on to lender, which is very common practice as of now. That can no more happen. Now the repayment, whatever it is, will directly go into the account of the lender. Whatever is the agreement between the lender and the loan service provider has to be settled between them directly.
Okay. See, Rajeshwari, there are a lot of questions on the APR side. Maybe annual. You have anything to showcase that with you now?
Right now, no, I don't. I can share the material right away. I mean, as long as when this goes through, we can share this detail also, calculation.
Okay, fine. And I mean, to audience, right? So we will be sharing a couple of things. One is on the checklist for what lender or what fintech to be followed as part of their app store or with respect to their website. And on the another side is which we have discussed right now, which is the APR, how to calculate the APR and all. We will be sending a separate email on that. So the next question, moving on to the next question, Rajeshwari, is FLDG still valid or it's not?
No, right. Now if you look at the circular, it says that FLD, the provisioning, etc., has to happen according to, they've given the link to that circular. So FLDG is almost obsolete.
Okay. And there's a question on the NPA provisioning, right? Is there any specific guidelines on that? Basel norms, loan provisions?
The current provisioning criteria for NBFCs on various values still hold good. There is no change as far as the provisioning is concerned.
Okay. Got it. I think we have came to the end of the session. Thank you so much, Rajeshwari and Alex. You've been very patiently answering to all these questions. I still believe that there are a lot of questions being unanswered. We'll definitely take that offline for sure. Coming back, so we conduct monthly webinars. Last month we conducted a BNPL webinar, and next month we are also taking some interesting hot topic which is available in the market. So we please follow us in our LinkedIn. We are pretty active on LinkedIn. And the final note, we provide a white labeled app to NBFCs and fintech companies. So any queries or any challenges that you face while building a digital lending app or digital lending website, with respect to loan origination or something, please feel free to reach out to us. We are always available in LinkedIn and other social media handles also. Thank you so much. Thanks a lot for attending this webinar. Next time we'll come up with another very good topic. Thanks a lot. Yeah.
Thank you.